Let's dive right into what might just be the biggest signal we've seen yet for the future of white-collar work. Recently, Cloudflare's Q1 2026 earnings report triggered a massive stock collapse, alongside a huge round of job cuts that honestly has the entire tech industry talking. And the market reaction? It was absolutely severe. In just a single after-hours trading session, Cloudflare experienced a dramatic 18% stock drop. Now, in the world of high-growth tech stocks, an 18% haircut overnight is a violent reaction. It signals deep, deep panic among investors. But to understand exactly why they panicked, we have to look at what triggered it. The human cost of this announcement is stark. We're talking about 1,100 people being let go, which represents exactly 20% of Cloudflare's entire workforce. 1 in 5 people at the company lost their jobs. So this isn't just a minor trim or a slight reorganization. This is a massive structural reduction in force. But the specific justification given for these job losses is what really makes this a watershed moment. Cloudflare's CEO, Matthew Prince, explicitly blamed agentic AI for this massive corporate restructuring. He stated point blank that this technology fundamentally changes the work they do. It's really one of the very first times a major, publicly traded tech company has explicitly pointed to advanced artificial intelligence as the direct reason for eliminating roles at this kind of scale. Which brings us to a really fascinating central question. Why punish efficiency? Think about it. If artificial intelligence is genuinely making the company leaner, faster, and more efficient, which is usually something Wall Street absolutely loves, why did the stock market panic and send shares plummeting? Let's look at the earnings numbers and get beyond the AI narrative. When you look at their Q1 revenue, Cloudflare actually beat analyst expectations. On paper, it was a pretty decent quarter, but their critical Q2 guidance totally missed the mark. Their revenue forecast for the upcoming quarter was completely below what Wall Street was expecting to see, and in today's market, any hint of slowing growth is punished severely. So before you even factor in artificial intelligence, the stock was already primed for a huge drop based purely on that forward-looking guidance. Now, if we put on our skeptical analyst hat for a second and look at that week forecast, you really have to ask yourself, is this agentic AI transformation a bold, futuristic innovation story? Or is it just a convenient excuse for slowing growth? Are they simply missing their sales targets, realizing they need to cut costs, and using a hyped-up AI narrative as a smokescreen for a standard corporate layoff? All right, let's dig into AI workflow automation and unpack what agentic AI actually is. Notice how CEO Matthew Prince didn't just say AI. He specifically cited agentic AI. We're not talking about a basic chatbot here, where you just type a prompt and get a quick text summary. Agentic AI refers to autonomous systems that are fully capable of executing multi-step goals across completely different software tools. You basically give the system a complex objective, and it breaks it down and executes all the steps entirely on its own. Cloudflare is specifically targeting areas with repetitive, process-driven work. So rather than having a human sales representative spend hours on manual lead qualification and data entry in HubSpot, or having a junior analyst manually pull data from various ads platforms to generate weekly reports, Cloudflare is betting that agentic AI can now securely and accurately handle these various specific processes. Theoretically, this frees up their remaining workforce to handle much more complex, high-level deal negotiations. The core strategy here is to automate the workflow itself, not just replace individual workers. They are fundamentally re-architecting how their processes run from start to finish, with the ultimate goal of creating a permanently leaner organization. Let's break down the winners versus the losers and look at the capital impact. The immediate impact here is brutal. The clear, devastating losers are those 1,100 employees and their families who were let go. Additionally, the short-term shareholders literally lost billions in market value overnight. But in the long term, the big winners are the companies actually building the AI agent platforms that make all this automation possible. And honestly, perhaps the biggest winners will be the hyper-efficient competitors who learn from Cloudflare's turbulent announcement and figure out how to implement this AI leverage model seamlessly. This brings us to their high-risk strategy and the massive execution gamble they are taking. There are 4 absolutely critical execution risks here. Number 1, unproven AI scale. Are these agentic models truly ready to handle complex enterprise-level customer interactions without breaking? Number 2, customer trust damage. Because if an AI agent hallucinates or mishandles a major client account, the revenue loss could be totally catastrophic. Number 3, sinking employee morale. Think about it. The remaining 80% of the workforce now has to maintain their productivity and company culture while working directly alongside the very technology that just replaced their colleagues. And number 4, poor market perception. The market clearly saw all these risks, which is exactly why the stock tanked.
Let's pivot to some operator takeaways and how you can audit your workflows.
For business operators, managers, or leaders who are trying to navigate this massive shift in labor capital, reacting out of fear simply isn't an option. You really need to follow this 4-step workflow audit. Step 1. Carefully identify the absolute most time-consuming, repetitive tasks in your department. Step 2. Calculate the actual, hard labor costs currently being spent on those exact tasks. Step 3. Begin a small, highly controlled test using an AI agent to automate just one of those tasks. And Step 4. Measure the real-world ROI. You literally must build your own internal data on AI's effectiveness so you're making these decisions from a firm position of knowledge. Because this shift isn't just about massive corporations cutting costs. Take the Side Hustle Command Center as a fantastic real-world example. This is an actual Etsy product built entirely using AI workflow tools. It allowed a single operator to create a highly complex financial dashboard without writing a single line of code. So AI leverage is also about empowering individuals to create totally new value and launch products that previously would have required hiring an entire team of developers. So is this a growth story or a cost story? Let's get to our final judgment. Returning to our central tension, why did the market actually punish them? Well, the answer is that the AI layoff essentially compounded the uncertainty of their weak revenue forecast. The weak guidance was the wound, and the AI layoff was just pouring salt right in it. Investors didn't look at Cloudflare and see a confident company executing a bold innovation strategy from a position of strength. Instead, they saw a company that looked really worried about slowing growth, resorting to defensive cost-cutting, and basically hoping the AI buzzword would somehow soften the blow. So I'll leave you with this. Is the Cloudflare story a painful preview of a massive new normal for tech layoffs that's going to sweep through every major company? Or is this just a one-off case of a business using AI as a highly convenient excuse for a standard slowdown? Take some time to really think about how your own workflows are positioned for this kind of shift. Thanks for joining me today, and keep learning.